Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Friday the 9th of September. Well, it would appear as though President Obama's speech last night was not well received looking at the financial markets today. And I think basically it's definitely a problem we're seeing here. Readers of the report know that we rely on our trade triangle technology for trends and not what a government official has to say, and this includes the President of the United States. I've learned that over the years, the markets generally tell you what they're going to do. Price action alone is the greatest truth you can see in the marketplace. Price action is what determines trends. Price action is what determines traders' actions. Many newbie traders think there must be some mystical power that drives markets. The truth is, the market is driven by people who believe that prices are going to go up or they're going to go down. It is just that simple. However, most investors tend to overthink the market. Now, I understand there's some folks out there that would disagree with that statement, and that's fine. They'll say that the fundamentals, i.e. supply and demand, earnings, etc., is what drives the market. Yes, there's a certain truth to that, but the reality is that's only part of the equation. The psychology of the market sentiment, or the psyche, can really play havoc on the fundamentals, and that is why price action alone is the best analyst for the markets in the world. Hey, let's go take a look at the markets now and see how they're performing, and we'll go to our portfolio and we'll just click here, and here we're on the portfolio, and it's the 1 p.m. update for Friday. We're going to be looking at the markets we track and see how they're doing. First of all, we'll start with the S&P 500 minus 60, so we know it's more of a trading range now as opposed to a sharp downward trend or a sharp upward trend. And I think we'll look at the, let me just adjust the screen a little bit here. So there we go. And I think we'll see this market really has been under pressure. We're looking at the weekly chart now, but I want to go to the daily chart because the weekly we're down. We're lower for the week right now. Despite everything else, we're still lower for the week. So let me just go to the daily. And here's the daily chart. I'm going to scope that into just 3 months so we get a real close-up view of what's going on. I'm also going to show you what we talked about just a few days ago, and when we said this is not a particularly positive trend for the S&P 500. What I meant was, here's the line. I think this is a flag formation. We talked about this. You can look at our other videos. This is not a particularly bullish sign. Now, if we close on Monday, even perhaps today, if we get a lot of pressure, if we close down below, let's say 1140, we're currently trading right around 1155. If we close down below 1140, which I somehow doubt will happen, but it could, this will be extremely negative, and it would mean there's a continuation pattern to the downside, and I think that's important to look. So we're saying if we come down here, let's say we extend this day right here, and we sort of close down here, this is very, very negative. This reinforces the pattern we talked about, this sort of big flag formation, and I think that's what's going to push the market probably lower. So let's see what happens come Monday. Let's see what happens in Europe. The dollar's gotten very strong, which is not necessarily good for exports, or what the argument would be it's not good for exports, but the trend is clearly up now in the dollar, and we'll be looking at that in just a moment. So let's clear the screen and go to our next market. In the next market, it's going to be silver, and silver is kind of really going nowhere. We've actually just popped down to a 55 reading, which is a trading range. So the trend has really kind of backed off, where a little bit for the week we're actually lower on the silver market. Not a lot, but certainly it's not such a robust picture. It's kind of like where we were here, sort of sideways. I think that's best left alone for the time being, but certainly with a 55, it is a trading range for now. Longer term, we're positive, and intermediate term, we're positive, but short term looks more like a trading range. You can see the action right here, not particularly positive. So next market is the market everybody wants to look at, and that's going to be gold. And gold, again, this is a very interesting market. The thing, I'm going to put my telestrator on here and show what we've been talking about all week and what's concerning us. The big concern is obviously let me take this off here. The big concern, of course, is the highs that we're seeing right here. This is the top of the downtrend trading channel, possible double top here. The other thing that was negative to me was this what we call a bearish engulfing line right here. That's when the next candlestick engulfs the previous candlestick and it's a red. Or it could be a blue if the market was going up. But that's not a good sign, particularly for the gold. But the market looks like it's going to be closing down maybe about $25 for the week. Not a big swing when you consider how volatile gold has just become. So I would say this $1,800 level is going to be very crucial for the first level of support. If that fails, then we're looking at $1,750, which is somewhere down in this range. Generally speaking, the longer term trend is positive, as we've said. Intermediate, positive. Short term looks to be negative, and we've got a score of 85, which is still a positive score, and I think that's the key thing here. It's unlike the silver, which is 55, this is 85, and it looks as though the longer term trend, there's not enough evidence to say this is a double top, which we talked about here. It's more a formation that's building. Now, if we continue to go sideways for, let's say, in another month or so, then this could be another big energy field to push this market into new high ground. So it's a little early to say that's what's going to happen, but generally speaking, the odds still favor being long this market and being patient. So let's clear everything off the screen, go to our next market, and that's going to be, clear that off, and we go to our next market, and that's going to be the crude oil. We talked about this again. I put the illustrator on here, and you'll see what we talked about. And we said this area right here, this 90 area, this top of the Donchian trading channel was enough to push this market, stop this market. That's exactly what has happened. Our longer term indicator is still negative on crude oil, and the pattern is very similar. If you look at it, you can just draw that pattern like this, and it's kind of similar. It's kind of reflecting what's going on in the equity markets. Now, the equity markets, if they continue to act the way we think they're going to act, then I think we'll see crude oil come out on the downside. Still a little too early to tell yet, but certainly this level right here, if we break below this area here, which is right around the 84 area, then I think we'll see a lot more negative action in this market. So that's something to watch. But again, the Donchian trade channels came through like a champ. We're in a 60 mode, which means we're in a trading range, and it just means you should basically be looking to use the Donchian trading channels. And oh, there's one more thing I want to share with you. Let me clear the screen for a second. Take that off, and I'm going to scope this down so you'll see. This is something we'd like to look at. And it's usually, we talked about it earlier this week, but it's sort of confirmed now. And that is, we made new highs here. This is a higher high than this, and the Williams percent R went down. That is what we call a negative divergence. I'm just going to spell that out there. Like negative divergence means new highs on this is so. This would be new highs. And this didn't follow. So that's something very, is telling you internally the market's weak. And of course today it was confirmed. And it looked as though we're going to close a little bit higher in crude oil, not that much higher. It depends how we close today, but certainly that's a signal that we may see this market come down and get into this zone right here, which we talked about earlier, and out of the Donchian trade channel. So we could possibly go down to 80 in this market. We'll just have to see how that works out. So let me clear the screens. Go to our next market, and the next market you're all going to want to see. This is what we've been talking about for quite some time. I'm going to scope it out a little further so you can see. This is the dollar index. We've talked about the dollar index. I know a lot of people weren't particularly bullish on this, but the reality is the trade triangles tend to tell you what they want to do. Now look at this. We mentioned and outlined this earlier, and that is, let me get my telestrator on. This is this big energy field right here. You may remember I couldn't spell energy yesterday. Well, it's obviously proven very well. We said the 76.10 level was the key level. Once it's broken on the upside, which it did yesterday, it closed at 76.24, giving this a buy signal. And here we are, we're off to the races. I could easily see this market up to these levels or even higher. Obviously, a lot of the currencies are going south because of the problems in Europe, And that's not going to go away. These politicians aren't going to solve this, and they don't want to solve it. They just have no idea what they're going to do. So this could very easily see this market trade up to the 80, 81. That's for the dollar against the other currencies. And it's not an unheard of level. We were back here in 2011 all the way over 81. And I'm going to scope this out some further. Let me just take this off the screen, clear the screen up, and let's just go back, let's say, several years, which we can. You can see it's had some pretty big moves. So the other thing you want to look at, and I'll scope this into maybe 2 years, and that is I'll take some of these signals off and clear this up so we get a much clearer picture. So we take the Donchian channels off, easy to do. So here's the plan, and you can really just draw a trend line, and you can see how it just broke out over these highs, and you make it simple, just a line chart. It's pretty clear what's going on. You can take your trend line tool, go from here, and it's almost picture perfect in terms of what's happened. So clear breakout, very strong market. This market's going to go higher, and if we look at where we could possibly go with this energy base, I think we could go quite easily test this 81 previous highs back in December and January of 2010 and 2011. So let's see how that plays out. But that's the big move today, I think. Not only the stock market, but also the dollar too. So next market we'll go to is the CRB index. And you can see this market again. I'm going to put the Donchian channel back on, which I really like to see, and that's very helpful for catching some of the highs. And you're not going to sell the highs, the chances are, but it's a great place to tell where a market is becoming overbought or oversold, as well as here it is. This is the indicator we talked about. As we went out of the channel, we were very high on the, let me scope this down, we're very high overbought. And we come back down, we went back up to test that again. The SAR, the parabolic SAR, gave a signal. We rallied back, a little risk here, just selling that against that high. Boom, we came down, and I think that's one of the stories. The big stories is the fact this is inflation. Our monthly, now this is an interesting fact, our monthly trade triangle in this particular index has been negative. If you may remember, it was positive on the dollar. In fact, let's just go back to look at the dollar because it's a little more interesting in my mind, and I'll show you what I mean. If you look at where we had the buy signal actually came in July for this market, and then we came back down. I understand that, but sometimes you don't ignore these longer term signals. They can be very, very powerful. So hey, this is Adam Hewson. I've taken a lot of time today. I'm going to be doing a weekend update. It'll be on Sunday. It won't be on Saturday. It'll be on Sunday as I'm traveling on Saturday. And have a great weekend. We've got a lot to look forward to next week. Some of these markets are really getting very interesting, and there's going to be some great opportunities to make money in the end of Q3 and also in Q4. So stay tuned to Market Club. Every success. Have a great weekend.